So welcome everybody. This is a weekly meeting, and just so that you know, right up here you can see we have a URL, so you can come back next week. You can either use the Zoom link, which will stay constant for about 18 more weeks, or you can use this format, tinyurl.com /, which is missing, RE market graphs, and then the date. And if you drop the date, then you go back to our archives. I'm Richard Calhoun with Creekside Realty. Here to share the weekly micro market update, and then after that we'll go through that pretty rapidly. Then we'll go into the monthly data. Here is a graph that basically shows you Silicon Valley and the hot spots and the cold spots and the neutral spots. So your red areas are your red hot marketplaces. Your blue areas through here are cold spots, and your black spots along the coast are a balanced marketplace. This is based on sales price to list price ratio. So this first slide and the second slide are going to look essentially the same, because one is magnitude and one is frequency. I am changing between them, and you can see how similar they are. They're not even flicking on the screen. So we'll go on to the third one, which is what I was starting to talk about, which is DUI. And notice the fairly significant change here. The amount of red is decreased. The amount of black has increased here, as well as along the San Mateo Bay Cities area, which means the market's slowing down. Why the difference between two slides? To get sales price, you have to have closed escrows. Escrows are taking about 30 days. That means the data that for the first two slides was basically data from 30 days ago, which predates shelter in place. Days unsold inventory is a leading indicator, and it's based on the ratio between offers accepted and current inventory. And so it's a much more current data point, and that's why the market has slowed. The other thing that you have to keep in mind, it's not an instantaneous data point, because in order to have stability and have meaning out of it, you need some sort of span period. So the span period I have selected is 5 weeks. So even this data goes back 5 weeks, but if we go back 5 weeks from now, you have 4 of them basically in shelter in place and only 1 pre-shelter in place. So it's getting pretty reflective of what's happening. But even shelter in place has been changing quite a bit. Moving on, these 22 lines are the different micro market areas. And as you can see right here, this is based on days of unsold inventory. And here you can see all the graphs are going up and to the right. And normally up and to the right is good, but with days of unsold inventory, going up and to the right is bad, because what that means is you're increasing the amount of inventory relative to the supply. Either one could be changing. Your supply could be increasing, or demand could be decreasing, or both. But basically you see all the areas going up. And I'll just point it out. You'll see this little huge dive. That's a bad data point. And here's a series of bad data points when I was having computer issues. I will go back and correct those given time. Moving on, this is the same data, just cleaned up a little bit by dropping all but 3. And I'm leaving what I'm considering the 3 most important ones on here. And they're basically Santa Clara County in the red, San Mateo County in the gray, and then Santa Clara County condos in the yellow. And what is significant here is almost always San Mateo County is quicker than Santa Clara County. And here you can see the reverse. The gray line is above the red, which means San Mateo County is slower. Moving on to the next data set is we're looking just at the available inventory. And you can see inventory was going up, but and this is red is Santa Clara, and I'm not going to show you the county data because they're the largest area, so they're the highest. So again, you have Santa Clara County at the top, San Mateo County is smaller, and San Mateo County single family homes is almost about the same volume as far as number of units as Santa Clara County condos, which is the yellow line. But you can see the trend is up. That happens every year because you start the year, end of the year with very little inventory, and it comes up. We had the Super Bowl, so we had a little bit of a flattening off here as the Bay Area got distracted, and then we're coming up, and then you can see right here we went from a peak, and then we dropped down fairly significantly, and that was with shelter in place. And the trend is basically the same for the other 2 county data, and down below you can see all 22 micro markets are doing the same thing. but the volume here is a lot lower. You can see we only have 100 units, and that's why they're sort of crunched together. Now we're changing over to the other half of the supply-demand curve, which is the number of offers. And this is the number of offers accepted in the past 5 weeks. And you can see, again, you start the year pretty low. And again, that's because you're going back 5 weeks. Right about the middle of January is the lowest, because at that point, when you go back 5 weeks, you're covering the holidays. You can see the bad data points when I was having computer problems. You can see the huge run-up in offers accepted. And then you can see shelter in place being announced and dropping down. And by the way, for impact on real estate, shelter in place didn't start until the 17th, but it was announced at a press conference fairly early on the 16th. So from the impact on real estate, it really started on March the 16th. And again, you can see the number of offers accepted in condos in Santa Clara County is, in this case, beating out San Mateo County a little bit. And we'll move on to the next graph. We're looking at closed transactions. Same pattern, but delayed, because now you're ramping up, and now your peak is much later. Your peak is somewhere around April the 4th, and that's again because it takes that 30-day lag time to close an escrow. And this is based on when the escrow closes, not when it's scheduled to close. And again, here's your Santa Clara County condos, here's your San Mateo single family, and then each one of your different micro market areas. Moving on to overbid frequency. This is how frequent buyers going to bump into another buyer over paying more than the seller was asking. So the sale price is greater than the list price. And again, in this case, you can see the red line is Santa Clara County. Here they're all bunched up together because when you're looking at a percentage, here's the frequency of overbidding because everything was jumped together. I spread it out. You can see Santa Clara County overbidding is more common. And even right now today, for escrows that are closing now, 70% of the sale price was greater than what the seller was asking for. But if we go back 30 days and then we go back 5 weeks, you start realizing that most of this data is from before shelter in place. But you can also see the trends up, and now you can see the last couple data points is leveled off. And this is because the few people that are going in and doing very quick closes were not running into overbidding quite as frequent. So I'd expect this curve to go down into the future. Moving on to the magnitude of overbidding. This is how much the buyer is overbidding. So you could overbid by $1, $1,000, $100,000. And it's based on a percentage instead of raw dollar amount. And again, you can see Santa Clara County being the red line, and it basically was going up. Bad data point here with the dip down, and now you can see it's been leveling off, and it will probably start slowing down and dipping down a little bit just because there isn't as much activity in the marketplace. And the $50 million question is, who's pulling out of the marketplace more, buyers or sellers? And this again is just pulling out that same data point by the county, red being Santa Clara, gray being San Mateo County, and yellow being Santa Clara County condos. So San Mateo County started off the year much stronger than Santa Clara County. Santa Clara County caught up, and they're almost basically on top of one another right now. It's a little bit interesting. Here, San Mateo County has started to go back up. You know, is that a trend? Is that a statistical fluctuation? We'll have to get more data points to really tell that. Moving on to sale price. This is the 90 percentile, so this is the most expensive, and that graph has to be mislabeled, and this has happened to me before on this graph. And the reason I say that is the red line is Santa Clara County, and that number is somewhere around $800,000, and that is not the 90 percentile, that is the 10 percentile price. So this is the least expensive homes in the Bay Area and Silicon Valley. And again, that's mislabeled. So now I actually put the dollar amounts with just the county. So we started off the year with Santa Clara County lowest price being, and this is condo townhouse at $500,000, and now you're at $535,000. The single family homes went from $800,000 to $880,000. So basically in a few short months, people were making 10% on their money, which is pretty good. San Mateo County went from $942 to $1118. Now this is median price, which is what everybody quotes. And most people only quote the median, but that only gives you an idea what the center part of the market's doing and not the outside. And if you focus on the red line, Santa Clara County, just because it's the biggest single micro market, You can see that we started off, we went down a little bit, and this is fairly common, and this isn't really necessarily loss in value. This is a trend where smaller homes tend to sell over the holidays, maybe because families pull out more for the holidays. You can see prices were going up, and now you basically are starting to see flat. And if you start looking just at the last couple data points, you know, there's a few micro market areas that are going up and a few that are going down, but overall, that tends to indicate you're flat when some are going up and some are going down. This is getting rid of everything. You can see the real numbers. 50 percentile for, which is also the median for Santa Clara County condos, is 765, going to 812. The red line is the Santa Clara County single family homes. We went from 1248 up to 1406. So 1406, that's $150,000 gain. Again, a little bit better than 10%. And San Mateo County went from 1487 up to 1750. All looks really good, but again, the trend that we were in earlier in the year before shelter in place is up straight. While we're in shelter in place, it's been pretty flat, and that's because we're closing mostly transactions from before and a few that have been more since. Is the 90 percentile. This one is labeled correctly, so you can see Santa Clara County, the red line right here, and I don't have the data point, but it's somewhere around maybe $2.5 million would be the median in Santa Clara County, and this is the top 10%. So you take the most expensive 10% homes in Santa Clara County and look at it, and you're somewhere around $2.5 million. This is breaking out, so it's a little bit easier to read, and it looks like I underestimated. It looks like it's 2711 now, up from 2625. So the appreciation at the top end wasn't as much. The dollar amount is isn't even much. It went up only $100,000 on a $2 million basis. But again, you're talking only about what's happening in that top echelon. And you can see that the condo townhouse in Santa Clara County is much lower, from $1,249 up to $1,425. So the most expensive condos in Santa Clara County are still basically under $1.5 million. And then the gray line at the top is San Mateo County. Looking at the duration of escrow, it's pretty uniform. There's some ups and downs, as you can see throughout the data. But basically, if you look at this, I don't know what you're going to say. The median point is maybe somewhere around 27 days. But if you look at the end of the graph here on the right, you can start seeing all the lines are going up. And that's basically indicating that people are having delays in closing their escrow with shelter in place. And that does happen. I had one escrow, fortunately, and we had a very small problem, and that problem delayed us by 5 days instead of 1 day. Here you can see the same thing with just looking at the major micro market areas to get a better clue on the data. This is San Mateo County, which is a hotter marketplace, so they're closing a little quicker. The buyers that feel they have to do that in order to be competitive, so they're closing the typical transaction here in 25 days. As shelter in place impact was going up, you can see it just ratcheted up, and we're now at 30 days. So it's taking 5 days longer. That's a 20% longer escrow in San Mateo County. Santa Clara County is sort of the same pattern, not quite the same magnitude, same pattern where it's going up, but it was only at 27 days. So it went from 27 days to 30 days, and the condos, you know, just got down to 28 days, and it also went up to 30. But you see the trend on all three micro market areas is up, which indicates it's taking longer to close the escrows. Moving on to median days on the market. This is actually, I think, way more important than the average days on the market. Unfortunately, average days on the market is what most of the people focus on. What becomes real interesting is the difference between the median and the average. If your median is low and your average is high, what that's really telling you is you have two different marketplaces. One where a listing comes on the market, attracts a buyer right away and sells immediately, typically as soon as the seller will look at the offer, typically either somewhere around 7 days or somewhere around 14 days, depending on if the seller wants 1 or 2 weekends of exposure. Unfortunately, right now, this data is pretty meaningless. And in fact, if you look at it, you'll say, hey, wait a minute, all these data points are going down, and that's good. Well, the reason it's going down is the MLS has decided to freeze days on market during the shelter in place. When you have a listing come on the market, even if it's on the shelter-in-place market for a week, the number of days on market is going to show as 0. So that's causing all the days to drop off, and that will continue to happen. But the important thing is to come back up here and look at things like transactions falling through back on the market listings. And you can see you got up to 7, and this was a reaction right after shelter in place was announced essentially a week earlier. But you can see we're back down, and these numbers are not that high. Basically, since shelter in place has been announced, we had only, and this is Santa Clara County data, and since we're in the 11th, this data is only through the 10th. Most of my other data, all my data is through the 10th, but because I collect it and then process it on the 11th, I date it normally on the 11th. On this one, I haven't taken that convention onto yet anyway. So anyway, you've had 87 transactions falling apart. Back on the market listings, which are transactions that fell apart. And I think, and you know, it's unclear to me, this is not supposed to be a listing that was in escrow that fell apart, because that would be a TFT. This is a listing that was withdrawn and came back on the marketplace. And that is happening. There was an increase in number of withdrawals that happened, and then a fair number of those will come back on the marketplace. Coming down, pendings, contingent, listings expired, listings canceled. So listings expired is pretty low, listings canceled. You know, you can see again after shelter in place, there was an initial reaction, 17, 25, 8, 11, but very rapidly, 6, 3, you've basically come back to equilibrium. So it's not that big of a deal as far as cancellations. One of the things I was working through is this bottom part. Since we're talking about the impact of coronavirus, I wanted to just throw this up. This is the county's own numbers. I'm not making this up. I'm taking a cut and paste off the website. We're going to come down here, and this is basically the number of hospitalizations. And you can see we peaked out on April the 2nd at just shy of 200 people in the hospital. And that's pretty significant, but you know, not huge. But then we were spent basically a week at constant levels, some fluctuation, but still basically in the real high 100s. And then yesterday reported, which is data from Thursday, we dropped to 99. So all of a sudden the number of people in the hospital dropped to 99. So the impacts of shelter in place are really starting to show up, and something's going to have to do. This table, I do apologize. Again, it's a landscape portrait issue that I hope to get addressed next week. But you can see here's the different micro market areas down the side, the key data points, and just to hit you real quick, days unsold inventory is one of the real key ones. And this is Santa Clara County single family homes. This is an effort to try to make it a little bit better, which I don't think worked. It's San Mateo County's different micro markets, and then the condo townhouse. But what I did for you is I put up a URL here that you can write down. And my typical URL for this discussion will be TinyURL /RE for real estate, market graphs, and then from graphs onward changes depending on what you do. So if you stop at graphs, you get the archives of these recorded sessions. These tables in portrait mode you can get by typing in handout and the date. And I do the year 2020, the month 04, and the date 11. And that will take you to a Google Drive, or you can go directly to the Google Drive. And I'm going through this really fast because one of the things is once it's archived, you can go back, pause it at any particular chart, and look at it more carefully. So that is it for the end of the micro market data. And at this point, I am going to go over, pull up the monthly data. Now, the monthly data is looking for March, and my monthly data is a little bit different than most people's monthly data. It's not the calendar month, but instead it is starting on March the 1st and coming forward 35 days. And that is what I consider to be the monthly data. Well, we'll talk about that chart since it's the one that came up. This is going back 20 years. And again, this is probably going to be a little bit of a landscape issue, although since I didn't bring it over to PowerPoint, it's not as bad. So this is 2020, then every year going back, and this is the data March. And again, March 1st through April 4th. So you got 31 days in March, 4 days in April, giving you the 5 week, because real estate has a huge weekly impact. So you have to keep the number of weeks the constant to have meaningful comparison. So you can see current inventory, and this would be current inventory as of late on the 4th of April or early morning on the 5th of April, for 773. You can see that's a pretty low number, partially, mainly because of shelter in place. A lot of sellers pulled on the market, off the marketplace, or more importantly, they didn't go on the market. But you can see in 18, we only had 625. And you can see that I go back all the way to 1999. I do actually have some data all the way back to 1997, not 100%. One thing I add on here is the square footage and the bedroom and bathroom count, so you have some concept of what that typical house is that we're talking about that's selling for asking 1.6 million. And then median days on market and average days. So you can see there's a little bit of a difference. Here there's a bigger difference, 12 to 24. Again, the days on market right now is a little misleading because they're frozen at 0. You can see days of unsold inventory is at 40.2. That's pretty good, but you can see it's higher than all these other years, and it's been increasing. And again, it's because just there's the shelter in place. You can see that we're selling 19 homes a day. You can see that is the lowest number by far, because right now, for a while there, for I think 2 weeks, we couldn't show any properties. Now we're allowed to show vacant properties where the occupant has moved out. And then again, the square footage. Then we'll scroll down and we'll get into closings. So again, these are closings that happened during that period of time, March 1st through April 4th. So they were actually contracts that were probably done mostly in the month of February. And you can see that we had 105% was the magnitude of overbidding. Frequency of overbidding was 71%. You can see the price range from $850,000 up to $2.7 million. You can see the number of closings is 715. You can see that's down a little bit. And again, this isn't impacted too much by shelter in place because any escrow that was closing by April 4th was probably negotiated before the shelter in place was announced on the 16th of March. There would be a few transactions that fell apart. Lenders were getting a lot more particular on loans, and criteria changed during escrow, and lenders were in some cases not doing what they call pipeline protection. I am going to try to find, here it is. That's the graphs I was looking for. I will have this prepared next month. This is logarithmic. This is how the county should be plotting the coronavirus, because this shows you the rate of appreciation, and that was why these lines are so straight. You can see back here in the 2007 recession, the low end of the market dropped before the middle of the market, and the top end dropped last with the stock market crash. The spread between the two changed. You can see that got pretty narrow here, got very large here because the bottom end of the market did the most depreciation. Moving on to what you're more likely to see, this is just in dollar linear amounts. The horizontal lines, the previous peaks. You can see how I have the dollar amounts labeled over here, and basically prices are going up. You can see graphically the huge increase we were seeing early in the year in prices. This is the sale price to list price ratio. I'm only showing from January 1st, 2011 up. The data is there. In fact, I'll just post it there, so if anybody's interested, they can go back and screen grab it. That's going back for 20 years. This is going back 10 years. You can see the current numbers. We're at 105% and 71%. 71% is on the right side, is the frequency of overbidding. The 105% is the magnitude. You can see the rapid increase right after the first of the year. And keep in mind, these are closed escrows. So even though this was happening, it's being reported basically for the February data point, that really happened in January. And that happened despite Super Bowl. I had a request for this graph. It's the advanced decline ratio. Again, that was going back 20 years. This is the same data going back only 10 years. And this was a mimic, and it's not done quite right, but it's close. It's basically the ratio. So up here you have the sale price to list price ratio, and you can see up. That's what I've been plotting. Then this is the ratio between the magnitude of overbidding. This is the frequency of overbidding, and this is finally the ratio. And you can see all three graphs are doing the same. What I was mimicking was the stock market. They have an advanced decline ratio, which is based on the number of units. I think I am going to convert to that model. This is just the ratio for each month. The reason to do it by units is if you have a month with few transactions, that should have less impact than one with twice as many transactions. And if you do raw units, you take into consideration the volume of the marketplace. Here are my key indexes. They're all labeled up here. That's 20 years. Same data set, only going back 10 years. You can go back to the archive and grab the 20 years if you want it. And this is just everything on there. And it's hard to really make any sense. You can see there's a huge annual cycle to it. So now what I did is I made an average. So there's the average for 10 years. Here is the average for just the last, that was 20 years. This is the last 10 years. What I'm doing now is I'm comparing what's happening to the inventory, for example, on the blue line right now, compared to the 12 months. It's a moving 12-month average. And so you can see that it's coming down. So that means that, and it's been coming down basically since August 1st. So that means compared to the previous year, so in 2019, it was compared to 2018, because you're dropping off August of 18, picking up August of 19, you can see inventory was dropping. You can see sales were level. It's very interesting. The red is the sales. We've been having fewer and fewer transactions in Santa Clara County for an extended period of time. And I believe it's because sellers with Prop 13, as prices appreciate more and more off of the 1978 basis that some people enjoy, those homes will never come on the market. So even though we're expanding population, we effectively have fewer and fewer homes that will be available for purchase. Here is your key indicators, again, for 20 years, same data set for 10. And these horizontal lines are in the wrong place, so that one is. It should be at 40 days. So the blue line is your days of unsold inventory. You can see it's rapidly going up. You can see that the pink line, which is the median days on market, is at 7. That's an historical low. Before shelter in place, we were at 8, which is an historical low. That means that 50% of every listing would be selling in 8 days, just over a week. You can see the huge drop in average days on market. And again, they're freezing it. Nobody's now can sell a listing with a large number of days on the market because they're simply not increasing. So then this is actually the raw data. And with that, I finished up and I have a few minutes left over. Oh, go ahead, Lily, go ahead.
Hi, hey, this is Lily. Yeah, can you hear me?
I can.
Oh, okay, good. I think, yeah, you explained it pretty well today. Now I can understand more.
And I am archiving this so you can go back and listen to anything that I went over too quickly for you.
Right. Yeah, I will do that. Yeah, thank you. And 40 minutes goes very fast.
It goes by very fast. This was the second Saturday of the month, and I think what I'm going to be doing in the future is doing the weekly data on the 1st, 3rd, 4th, and if there's a 5th Saturday. And on the 2nd Saturday, I'm going to focus just on the monthly data and skip the micro market so that I'm not racing it through, because I did race and I knew I was going to be racing.
Okay, so that means it's every Saturday at 9.
Every Saturday at 9, and the same URL will get you in for a while. Going forward, you can, just so that we got a bit of time here, tinaurl.com/RE for real estate, market graphs. That takes you to the YouTube channel. That is where all these archives are posted. I try to get them up the same day, so later today, hopefully this will be posted. If you add in the date in the format of year 2020, 04 for April, and then the month 18 should be the URL for next week's meeting.
Oh, yes. Yeah, that's what I did. I typed it in. That's how I get to Zoom. Okay, perfect. Thank you.
You're more than welcome. Thank you for joining me.
Sure.
And with that, we have less than a minute left. Anyone have a question that they want to ask? Well, in that case, I think it's a wrap. I'll see everybody next week, and thanks for joining me. Bye for now.
Bye.